Hi, I'd like to say hello to our listeners of this new edition of the Geschwaf podcast from Widen, the go-to digital asset infrastructure and technology partner for regulated institutions in digital assets. In this episode, I'd like to talk about some of the clear trends, opportunities and challenges that are now emerging in the European institutional market with respect to digital assets. As the digital asset industry begins to advance in a more regulated state of maturity, banks, brokers, and others are increasingly facing a set of dilemmas. The early stages of the market were driven by startups who could move in an agile manner and react to developments and innovations as they emerged. However, now the banks and TradFi institutions such as brokers, exchanges, asset managers, and hedge funds are here to stay. They face a huge level of education, regulation, and complexity in their efforts to understand, adapt, and adopt to digital assets. This includes finding ways to integrate digital assets into their existing systems and infrastructure, managing their technology best practices, governance, compliance, and processes, whilst attempting to accommodate the unique properties of crypto. And this is where service and solution providers such as Widen comes in. However, they also face strategic questions such as how to create a competitive offering, stay ahead of trends, managing and implement regulation whilst attempting to integrate new innovation and get ahead of the competition. Given the fact that we now have a triple whammy of regulation in the EU in terms of MiCA, DORA, and the travel rule, understanding how to navigate the challenges and support the opportunities presented by digital assets, you need to have concrete insights and advice from seasoned professionals in this space. Today's guest is just that person. Dominik Jocham, principal at the Business Engineering Institute St. Gallen, supports banks and institutions every day in finding their way through the challenges of the emerging digital asset space. Dominik has been at the convergence of digital assets and banking since 2018, when he was working on business development in blockchain at Bank Frick. Since then, he has co-founded his own company and helped establish the digital asset consulting practice at his current employer, Business Engineering Institute St. Gallen, or BEI for short. So, Dominik, I'd like to kick off by asking you to give an introduction to both yourself and to BEI, provide some insights into the services you and BEI provide to banks and financial institutions, and how you help develop the blockchain and digital asset practice at BEI. The mic is yours, Dominik, as they say.
Good day, Stu. First of all, thank you very much for having me here. As I said before, my name is Dominik Jocham. I'm working at the BEI. The BEI is a boutique consultancy firm situated in St. Gallen. We consult financial institutions across Switzerland, Liechtenstein, Germany, mainly in regards of transformation, business development projects, and also implementation projects. On the one hand of regulations, but also on technical matters. What makes us unique is that we have a very strong academia background. We have several doctoral researchers on the contract who solve challenges from our partners from the industry, starting from ICT service provider to banks up to regulated banks, international banks, and they provide us with the questions. The doctoral researchers solve them or create the framework which we can apply then in a practical way in consultancy mandates. The second point which makes us unique is that we are not bound or contractual bound to a tool, to a specific provider. We have a neutrality in every angle. So we don't sell a product, we sell solutions for our clients and support the clients by selecting the proper solution for them. Our digital asset practices, it covers several angles. First of all, we have developed the framework which supports banks to integrate or to have a look where does digital assets or stuff like Bitcoin, Ethereum and stuff like that affect their business. Let's say on the broker side, let's say on the co-banking side or on the distribution side. Based on that, we have done several projects to bring banks up to speed regarding a target operating model, how they can implement digital assets in practice, but also what kind of opportunities lie beyond digital assets as we know it from a buy and hold perspective, but also in regards to stablecoins, to digital money. What kind of use cases are relevant for banks, but also for retailers in this space?
That's really interesting. I mean, we get a lot of questions around, some of the adjunct subjects in terms of digital assets, and we even see some regulated institutions asking questions about things like staking or DeFi, which I'm sure we'll come on to in a little bit later. But my quick initial question for you is, how do you and BI see the coalescence or potential future, convergence or overlap between TradFi and the digital asset space? I think we're very much in the incumbency at the moment, but do you have any thoughts about where this projects and goes to?
I agree with you in regards of the level of maturity. I think to answer this question properly, we have to expand the term digital assets significantly. It's digital assets from first understanding is as assets like Bitcoin currencies or other FINMA, the understanding of the FINMA from the record. We have to expand that to digital money, like stablecoins, commercial bank money tokens, but also about tokenized assets, which will have a large influence how we conduct B2B or bank-to-bank business in a few years' time. When we look at our clients, what they are most interested in, some of them are specialized in delivering a scalable product to their clients in a scalable way. They most like to have the capability to offer digital assets to their clients, mostly retail clients. More corporate-oriented banks are interested in how we can speed up payment processes by providing tokenized book money, a commercial bank money token. Is this something which makes sense from a corporate perspective, from a corporate treasury perspective? Yes, it does make sense, and but it's very, very challenging to overcome the cultural, behaviors or the cultural change that you need to have to at this corporate. There's two places which we see potential of in the future.
Absolutely. And if we just went back to the original thesis of DLT or distributed ledger technology, do you see in 5, 10, 15, 20 years that we will get that final rewiring of the legacy infrastructure in financial services that's been around since the late 60s, early 70s, when we went from tape to tabular information and so that's been around for a long time. We have fixed protocol, we have Swift, we have a lot of things in place that work, but the future could be either public or private permission blockchains effectively being the new rewiring and infrastructure of the digital of financial services. This might just be, V 0.1 that we're talking about at the moment.
The rewiring of the financial infrastructure, I think it's already taken place, but not driven by digital assets. It's more regulatory driven when we look at in regards to the Digital Operation Resilience Act, which also heavily influence how infrastructure providers will be defined as critical. This can have not on a specialized technical level, but in an organized level, partnership-based interaction. This will rewire the financial industry relationships. When we go into the topic of how we can conduct the payment or how we send money across the world, I think this will happen next years, that the first use cases will be more broad available, but not in a standardized way as we have now Swift or SIG in Switzerland, stuff like that. This will take time, but I think it's a very realistic future.
Very good insight. So maybe just turning back to BEI itself for a moment. How you're planning on developing the practice, considering all the regulation, implementation, and changes that are going on in the market. How do you see the growth of BEI?
For us, it's the same as for banks. A bank is specialized in delivery as a very unique selling proposition. When we talk about retail banks, they're able to scalable distribute a very standardized product to a very comparable client bases. On a private bank, it's more about individualization. For us at BEI, we have our roots in the sourcing of financial services, sourcing framework, sourcing models for financial institutions. Like, how do I source a core banking system? What is the architecture of core banking system? How does the architecture influence my offering for my clients? And our offering is currently based on this experience and this know-how. From my point of view, we will expand into digital assets based on this knowledge. So let's say if the Swiss National Bank says, okay, at the business banks, we're going to have a tokenized Swiss franc, you have to implement it like that. We can advise these banks, or we will advise, or try to advise these banks, how this will be reflected in the core banking system on a traditional technology stack. There's one side which we are experienced in, and also where we have our strengths. Another one is there will be more regulations or adjusted regulations. We have several projects done or doing currently several projects which encompasses the operationalization of regulatory requirements. It's beyond the legal disclaimer, okay, we need to do this like that. We bring in the experience, okay, how do you guys bring that in your core banking system? How do you guys bring this in your surrounding system on a data level, on application level? How do you handle architecture across different systems? Where do you have critical functions in regards to operation resilience or to DORA? And how are they affected by this regulation in our operative way? And this, in combination of digital assets, this will be one of our main targets to foster this area of consultancy.
Thank you, Dominik. That was really good, and I think it gives our audience a very clear understanding of what BEI can provide to its community. So maybe moving on a little bit, because everything you've learned so far with regards to what banks and financial institutions are, what keeps them awake at night in terms of digital assets and the entry into. From a strategic perspective, what do you see or think are some of the biggest challenges or questions for banks or TradFi firms when they're considering their entry into the digital asset sector?
It's a very good question, Stu. I'd like to split on several pieces. One consideration is always how I am, what's the expectation for my clients? Are they expecting me to deliver a stable, very risk-averse service to them, and also to align my business model with this promise? If I'm going to offer digital asset services, doesn't matter if I'm going to bank companies with digital asset connects or buying crypto with my bank, this will be considered strongly. What are the reputational risk? What are the financial risk by offering this service? That's one field of action. The second one is, how do I integrate this service in my operations? By selecting specialized providers, this risk can mitigate it strongly, but also it's a change process which have to be undertaken along various levels in the operations side. For example, if you're going to have again regarding DORA, you're going to have a very strict regime regarding IST risk management, IST third-party provider risk management. You have to consider that by adding a new service. This will also bring more work to that. A third one will be, okay, I have a sustainable offering. How do I communicate and how do I analyze and also label a crypto offering in regard to sustainability? Is this possible? How does it make sense for my overall sustainable targets? And the fourth one, from my experience, is about change process. So you're going to implement something which can be naturally traded 7/24, 365 on native crypto exchanges. And you have to make the cut due to your core banking operations, which is usually, some exceptions exist, usually not 24/7 available. You have to communicate this to clients, to staff as well, and to mitigate, okay, guys, we're offering a digital asset offering, but it's not an offering at all because it's not that much is possible. How does it make sense? This is one of the questions which you have to address clearly, and also who is going to be responsible in the run not only a change process, but a run process, because you have to monitor regulations, you have to monitor counterparty risk and all other stuff, which makes us a very complex offering.
Thank you. Absolutely correct. But I'm sure that the banks are willing to go to market. There are a lot of operational challenges that they would have to reinvent definitely some parts of their business to take on the specific nuances and opportunities that digital assets actually offer to the banks in the sector. I'd like to shift gears now into a different topic, maybe around CBDCs. The BEI and Swisscom regularly publish, their core banking radar report. As part of this collaboration, you investigated the readiness of Swiss banks to handle a digital franc, either CBDC or the CBMT. Could you please share some of your thoughts with our listeners today about this project? What was the scope and what were the findings?
Yeah, let's look at the scope. The scope was to solve the question, or to, like a myth busting. My core banking system is not able to handle central bank digital currencies on one hand, but also not the commercial bank money tokens on the other hand. So we used the Swisscom and the BI. We have been discussing, okay, how can we address this myth? And we looked deep into the core banking system. How is it usually addressed when you introduce a new currency? Let's say the Jocham bank has just Swiss francs and euros, and I would like to have USDs as a account currency in my core banking system. This was our hypothesis, which we started off. We have been looking, okay, when we have stable framework conditions, like it's CBDC is handled exactly like a Swiss franc is handled today, with the cutoff times, with the trading times, with accountability within the core banking system, something like that. A core banking system is basically able to reflect this CBDC in the current state. The challenges come when you're going to expand and fully delve into the possibilities of a DLT technology or blockchain technology by having fractional trades, by having smart contracts employed, by having decentralized finance mechanisms used. Then you're going to have to adapt your core banking system, expand uptime, expand the skill set which is necessary to operate your collateral across several institutions, stuff like that. This is one finding, or the two findings, which are remarkable from our point of view due to the implicit readiness of most of the Swiss banks by having just a core banking system in place, and the framework is not going to change. This mainly prerequisite too.
In light of those findings, we get a lot of questions around not just trading and trade life cycle and front, middle, and back office needs and requirements to set up the whole infrastructure for a bank. We get a lot of questions around settlement and payments, or payments for those settlements, whether it's payment to or receiving from. So we get a lot of questions around how to integrate to fiat payment rails, but more importantly, what is the market in terms of using digital currencies, whether it's a CBDC or whether it's a stable coin, to actually make payments. So therefore, you're using effectively the same infrastructure for settlement on both sides. So therefore, you're demystifying that. How long do you think it could be before banks, for example, in Switzerland, or even in other countries such as in the EU, they could take full advantage of on-chain transactions, not just for payments, but also for remittances, but also for settlements? It's got to be 24/7 operations. It provides near instant settlement. So there's a lot of advantages, but how long would this potentially take?
I can't say how long it will take, but I can outline what kind of topic which I have to address first. So yeah, we can build on that if it's okay for you, Stuart. Maker supports the entry of regulated stablecoins in the European Union. Let's call this as an example. Banks now have a regulatory groundwork which on which they can build on. So, for example, they can create their own stablecoins, their own commercial bank money tokens. So, one step, the groundwork is laid. The second one which has to have is it's a use case which is from an economic perspective compelling to the banks. For example, remittance or international payments. The third part which have to be in place is not the standard, but standards in regards how we can integrate various protocols, various blockchains, so we can have not seamless, but a nearly seamless interchange of value between different banks. But it's only a hypothesis. There are going to be several projects by using permissionless, non-permissionless blockchains at the start. It will converge to a standard or to several standards, but it's not at this time, at this point in time. And after that, it will be also the most important thing. There has to have demand by the market, and when these steps are reached, I think then we can talk about real standard in regards commercial bank money token or CBDCs. This is project management steps or artifacts which have to be ready. On the other hand, the European Union is working on a digital euro, which should bring fiat money or cash to the digital environment. They have a clear plan regarding the next two steps. First of all, is the current step is in regard they are evaluating providers for several technical supporting functions like the offline functionality of the digital euro, like ID or onboarding of a large amount of clients. And the next step will be, as far as I'm aware, it's about 25, 26. They are going to look into the law, how we can build a law which supports this digital euro, and then they are going to create a POC, a technical live POC, to validate their assumptions. I hope this sheds some light in regards to your question, when we will be able to have this in a mass market or one as mass market.
No, it definitely does. And I'm sure that it's not really for me, it's for our listeners to actually gain some insights and some thoughts as they plan for the future as well, and take advantage of, this new groundbreaking technology across many different areas of, DLT, blockchain and digital assets. So I'd like to shift gears for a second, Dominik, and onto one of the hot topics that our regulated clients and prospects are always talking about to us, which is DORA. DORA, also known as the Digital Operational Resilience Act, is a new piece of legislation that came into effect in January 2025. It's aimed at increasing resilience of digital operations across the European Union banking sector. So in terms of the market in the EU, could you potentially briefly touch on some of the real core main areas and topic that DORA covers, and also potentially with specific a reference to CASPs?
Yes, DORA is a very, very impactful regulation for banks. In a nutshell, it's about you have to be more resilient in regards to ICT services. So basically, if you have a provider who provides you the core banking system, you have to manage this provider and risk associated with this provider, but also with this provided services very closely. Won't go really deep in the law, but it's very important that you manage it closely. And DORA has 5 pillars which should address that. The first one is you have to have an ICT risk management in place, which encompasses all risk associated with ICT services, like cyber attacks, like blackouts, stuff like that. The second pillar is you have to have an adjusted ICT-related incident reporting, which means if an incident occurs when your infrastructure and it classifies according to DORA to a major incident, you have very strict hours where you have to report this incident. For example, you have to make an initial report quite shortly after you become aware about the incident. Then you have to make an update report, and then a final report in very, very defined timeframes to your local supervising authority. The third one, you have to test your operational resilience. So threat-led penetration testing for critical functions, for other functions. A fourth one is one of, from my experience, one of the most impactful pillars, and also in regards to CASPs, essential and crucial for banks in the European Union. It's about the IST third-party risk management. So if you're a regulated bank in the European Union, let's call it Bank A, you're regulated in the European Union, you have to be compliant with DORA. You have to assess your ICT service providers like a CASP as well as your core banking provider regarding risks, regarding the impact if they bail out or fall out if they are not able to deliver their service to you. You have to have an alternative in place if it's affecting one of your critical functions. And financial institutions doesn't have usually 5 or 6 or 7 providers. They are going into the hundreds usually if you have a certain size, and which this makes a very a complex task to manage and also to analyze and evaluate every one of your ICT third-party provider. And the fifth one, the last one, it's about information sharing. So basically, you're allowed to share information between your peers, or with your other regulated financial institutions. Come back to CASPs. MiCA states that if you're going to offer crypto services in the European Union, you have to be compliant with DORA regulations. So basically, everything which a financial institution incumbent has to have applied to have to apply you as a CASP as well. On the other hand, DORA also states that in the scope that this kind of crypto service providers are also part of in scope of the DORA regulation. Depending on the size of your bank, of your institution, there are different levels of details which must be adhered to. For example, it has to be, you can adjust your risk framework to your size, for example, but also the ground principles have to adhere to.
Thank you. And just a question for you is that we at Widen are getting obviously a lot of questions from our banking customers in the EU about our compliance with DORA, and we're putting a lot of stuff together which we'd already prepared for the intervention of DORA. But we see it, and also a lot of prospects. It seems that even though it came in January, people are still working towards DORA compliance, as opposed to they'd worked towards DORA compliance before it came in January. And what do you sort of see as the sort of readiness of the industry for actually supporting DORA?
You have to imagine a DORA regulation tackles a lot of points in the operation side of a bank, which are usually not on top of the CEO's head or mind. Also, it ranges from not only I have to identify which are the subcontractors of my ICT service providers, but also to have an adequate taxonomy in place, which enables me to make the supply chain from the subcontractor, ICT service party provider, service consumer, and also the final user of the service in certain group constellations. This taxonomy has to be in place, and this should support this chain of services and creating transparency. This enormous complex task, and just one facet of this DORA regulation. It takes time to be 100% compliant with DORA. From my experience, if you go deeper into the DORA regulation, or when you have solved one topic in this regulation, another topic pops out. The main reason is that DORA aims to reduce silo structures within a bank. DORA aims to connect activities in one business unit to the other business unit. Like you have a CEO area, and it has to be connected to the purchasing area. It has connected to the trading floor in regards to the tools used. And that's an operational challenge for most banks.
Yeah, we're definitely seeing that ourselves, but it's a challenge, but it's also an opportunity as well. So that's what
definitely
brings. Anyway, moving away maybe from regulation to something a little bit more, at a bit of a different light. So far, the digital asset sector has been notoriously hype-driven, as we all know, with trends that come and go. within a matter of months, as well as macroeconomic and political news driving price volatility, as we've recently seen with the inauguration of the Trump administration and threats of tariffs and trade wars. As a disclaimer, this is being recorded at the beginning of February 2025. As an advisor to banks and somebody who is involved with these segments, such as, for example, DeFi, how do you pick out what matters most from that hype?
I think in my role as a consultant, it's very important to align interest with trending topics. Interest in regards to what I would like to make my organization more efficient from a bank's perspective. I would like to offer digital assets from a sales perspective, and the client base is different. You have, to one hand, you have technology which moves so fast on the blockchain space without the regulation. You have then the financial connects which needs regulation. And then the speed is it's slower down. And then you have to traditional financial institutions would like to have one slice of this technology, one slice of this opportunity implemented in their business model. In my role, I bring in how can interest align with technology, but also to bring in relevance. And for me, it's at the moment or in the next months, years, most important thing is tokenization. Tokenization of money, tokenization of assets. I think this will be more important to financial institutions, just also on a cost basis, to reduce costs on trades and settlements, but also on collateral, which is needed to in regards to counterparty risk as of today. With atomic swaps, this can heavily influence the collateral which is needed. I think from a regulatory perspective, this is something they know from the traditional business, but it's not something which it's too, sorry for the word, too fancy from a banking perspective, like decentralized finance.
I think from what we see in here, DeFi is some ways away, but I hope that tokenization is not a hype or is not hype driven. Hopefully tokenization
correct, yeah.
Stay. Maybe we could maybe move to the last question, and considering the fact that you're based in Switzerland, let's move back to Switzerland for a moment. And given Switzerland's role as as a leader and a forebearer when it comes to digital assets, what do you see will be the potential biggest developments in Switzerland in 2025 and potentially onward?
The most impactful from a traditional banking perspective, I think, is going to be the intermediate results of the commercial bank money token project from Swiss bankers. If they're going to be published this year, I'm not quite sure if this year or next year. This will be very, very important, but also very interesting to see how they handle that, the involved banks. But also, a second one is how the regulation is supporting the crypto valley, the crypto developments is going to be okay. We stand with the crypto valley on the notorious side, and we enable the crypto world to be competitive across Europe, across the world. I think there's definitely a field of action, and these two things will be important on a wider scale. I assume that more banks will offer digital assets, as we know from already pioneers like PostFinance, Zuckerkabi, Luzerner KB, etc. They will offer digital assets to their clients, and yeah, it's driving on, and then the offering will be wider.
Absolutely, we're definitely seeing the growth in understanding of digital assets and adoption with the cantonal banks. But what about the private banks, the banques privées? How do you see them adopting digital assets, and would there be a growth in that adoption?
It's an interesting question because I see different signals, or I have different feedback from private banks. It depends on the client base. It really depends on the client base. If we're going to have a client base which is very strong into trading, it's a low-hanging fruit to introduce some kind of digital asset offering just from an interest sake point of view. If you have more preserving wealth and hand over wealth to the next generation is more your business. I think there's not that much momentum as it could be there. As I said before, it's very important that digital assets complement your offering or USP. When you talk about private banks, not just would like to have trade in Bitcoin or digital assets with private bank A. It's more important to have a risk overview about your portfolio. How does an exposure into crypto assets affect your overall risk exposure of your investments? Or how do you handle transition of money, of wealth to the next generation by storing your digital assets of the private bank? Yeah, haven't done any trade with the private bank, but storing a digital asset to your private key with the private bank, which enables the bank to have a statement about your overall wealth, but also to handle the transition to the next generation very smoothly. I think the later case will be even more important as time goes on, and the first case, it will become also available to most private banks, but not as fast as in other banking segments.
Thank you for that, and I completely understand that. And the case for wealth preservation and handing that on to future generations, I think, will drive an adoption of custody use cases within private banks. Anyway, Dominik, thank you very much for your awesome insights, views, and commentary. And I'm sure you have given our listeners a lot to think about as they have tuned into this edition of the Gesprochen podcast. There's so much going on and so much opportunity for regulated financial institutions in digital assets that podcasts like these really help shape people's thoughts on the space. As with all of our guests and our loyal audience, you are the people that has made and continues to make the Gesprochen podcast one of the main go-to podcasts in the institutional digital asset space. So Widen's continued gratitude goes out to you all. We have many more exciting topics and awesome guests coming up over the next few months. So as ever, if you've liked what you heard today, please come back and also share with your friends and colleagues. And as they say in the movies, that's a wrap. Thank you, Dominik, and thank you for everybody for listening in today.